The day of reckoning for the housing market is coming, and it could be coming very soon. In this video, I've got so much information and a lot of things to cover, so you're not going to want to miss this one. You're going to want to watch to the end because there's some huge new information and some new reasons I found out why the housing market is running so hot, but it could also be the thing that triggers the next housing market crash. Okay, let's get into it. Okay, first we want to talk about the day of reckoning for the property market, and could this be the last kick of the can down the road? Because I'm sure you're all hearing about how they just keep kicking the can down the road, just keep on avoiding it, but eventually the road has to end and eventually they're going to have to face the music. I'm then going to go over how pension funds are buying up entire communities and how Wall Street is slowly becoming your landlord. And then I'll get into a warning from the IMF and their thoughts on what could trigger the next global financial crisis or housing market crash. So what has been fueling this housing market boom? Well, it's been low interest rates. But eventually the housing market will price in these low interest rates, and then what is the housing market going to do? Because interest rates are already at zero and they're slowly rising. What you have to know is the past 30 years of this housing market boom hasn't been normal. And normally in the past, houses only went up at about the same rate as inflation. But with interest rates falling from double digits in the 1990s to now to zero for the Federal Reserve and the Reserve Bank of Australia, they've run out of ammo. And they keep saying they've got tools to deal with the next economic crisis. But really, the question I'm asking myself, even if we make it out of this recession, what are they going to do when the next recession hits? They've already got interest rates at zero. They've already done quantitative easing 1, 2, and then to infinity. They've already done trillions of dollars in fiscal stimulus, aka helicopter money. So if another black swan event hit or another financial crisis hits, what are the Federal Reserve, the Reserve Bank of Australia, the central banks and governments around the world going to be able to do? Well, my thoughts is really they can't do anything. Sure, they could print more money, but there's something called the law of diminishing returns. So that means, say for example, in 2008, they bailed out the banks with 700 billion. What have they done in 2020? They've printed 10 times that, 7 trillion, because of the law of diminishing returns. So what are they going to have to do during the next financial crisis? Print 70, 100 trillion dollars? Well, at that point, people would just lose faith in the currency and hyperinflation will come, because that's ultimately what happens when people lose faith in the currency. So I don't think that's going to work. Some people say they can drop interest rates into the negative. Well, look at Europe. They've got negative interest rates and it obviously hasn't worked there. And the Federal Reserve and the Reserve Bank of Australia are saying they don't want to go down the negative interest rate route, because then that's also bad for banks. And what that could cause is a credit crunch, because banks won't want to lend. And then that will just make the downward spiral even worse. And then the last option is helicopter money, where the government just literally send checks in the mail. But they've already been doing that, and the government debt is getting out of control, and they've already starting to raise taxes. What are they going to be able to do next time? Give everyone $10,000, $50,000? Again, that would lead to high inflation or hyperinflation. So really what I think has happened is they've backed themselves into a corner, and the only way out of this is to eventually face the music, let the markets correct, let the economy correct. It's going to be painful in the short term, but then we can rebuild from a more solid foundation and a more sustainable economy that doesn't rely on printing money, devaluing your money, and more debt. And something that I thought was interesting, and have a look at this, these are the most expensive housing markets in the world. So you can look at this to see how your country or how your city fares compared to the rest of the world. So as we can see here, Hong Kong, the median house price is 20 times income. In Vancouver, I've got a lot of viewers in Canada that are watching this. You've got the second most unaffordable housing market, where the median house price is now 13 times income. Australia, where I'm from, it's getting more and more expensive, and that's 11.8 times income. In New Zealand, for the New Zealanders watching, it's 10 times income. And then San Jose is 9.6 and San Francisco is 9.6. And I've got a lot of US viewers here. Obviously, you all know Los Angeles is very unaffordable. It's 8.9 times the average income. So what's going to happen in Canada, Australia, US? Could it be possible that we get to Hong Kong levels where house prices are 20 times the average medium income? I highly doubt that. Obviously, Hong Kong has a lot of scarcity, but it just shows you how crazy things could really get. But have a listen to this. Commonwealth Bank economist Gareth Erd says, falling interest rates have had a major economic tailwind for the past 30 years. But with rates at zero and households carrying record levels of debt, a reckoning is coming. That would be felt across the economy and especially in the housing market. Every time the central bank cuts interest rates, a person walks into a bank and asks for a bigger loan to pay for a house. It happens again and again, he says. You get to the point where you can't keep doing that when interest rates are at zero. And he says we've now had the last kick of the can down the road. And I completely agree. What do you think about this? And he also goes on to say that there's an issue with wage growth as well. House prices are skyrocketing, but wages aren't keeping up with that. And that's going to have a weakening demand on the housing market as well. And this is something I've been saying is the biggest risk I think for the housing market right now is interest rates going up much sooner than the Federal Reserve and the Reserve Bank of Australia say they're going to. And we're seeing this in the bond market, treasury yields. The 10-year treasury yield has been rising rapidly. It's now increased around 1.2% from its low last year. And for every 1% rise in interest rates, your borrowing capacity gets reduced by 10 to 15%. That also means in many cases, house prices can fall 10%. So the IMF warns rate rise is a risk to asset prices. And you all see what's happening in the stock market. As soon as the treasury yields spike, the stock market starts selling off straight away. The International Monetary Fund warns that a rebound in interest rates in the United States could cause a disorderly unwinding of inflated global asset prices, such as the housing market and the stock market. And they send this warning: to tackle the vulnerabilities lurking in asset markets across the world, financial authorities should prepare to deploy non-interest rate regulatory tools to cool asset prices and reduce financial risk. So the central banks and the governments around the world are coming under more and more pressure to step in to cool this booming housing market and booming asset prices, because what this is creating is a K-shaped recovery. The rich are getting richer since the pandemic started. Meanwhile, the middle class and the poor are getting destroyed. And this is what I think is another big risk for the housing market, is government intervention, which will cool the housing market. So everyone's getting in now thinking, yeah, it's gonna boom. I'm gonna flip my property next year and make $100,000 and be rich. But what happens if inflation gets much higher than they expected and central banks have to lift interest rates much sooner than they expected, because they always say one thing and then do another? And what happens if all of a sudden housing affordability becomes a political issue, and then they step in with a bunch of new tax changes where it disincentivizes investors to get into housing, and then all of a sudden investors start offloading houses due to the new regulatory changes? That's something I think is just another big risk for the housing market, and what not many people are thinking of. Okay, now let's get into another big issue, which is making this housing crisis even worse. And when I continue to find more information on this, it just makes me sick, because I know how big of an issue this is going to create. So have a listen to this. If you sell a house these days, the buyer might be a pension fund. Yield-chasing investors are snapping up single-family homes, competing with ordinary Americans and driving up prices. So you've probably been following this housing market and you've been thinking to yourself, who can afford to pay these crazy prices for these homes? And who are all these cashed-out buyers? And who are all these buyers that are waiving all contingencies and offering 20 to 30% above asking price? Well, that very much could be a pension fund or a real estate investment trust who are looting the general population. They're taking advantage of an essential human need, housing, and they're profiting from it, and they're profiting it big time. And have a look at this. Wall Street is now becoming your landlord. With the help from the federal government, institutional investors are becoming major players in the rental market. They've promised to return profits to their shareholders and convenience to their tenants. But investors are happy and the tenants aren't. What these big institutions are doing is they're going out there, they're buying up nearly whole communities, they're cutting costs, they're trying everything they can not to do maintenance, not to do repairs. They're trying to get tenants to do the repairs, and they're also more likely to evict their tenants even if they're 1 day late and charge them late fees and all other fees. And I just think it's so wrong that we've gotten to the point where every little thing in this world is being brought up by these huge financial institutions and everything is being monopolized. Small businesses are going out of business and being taken over by big corporations. Small mum and dad landlords are being priced out by big institutional investors, and every basic human need is becoming financialized. And guess what? What happened in 2008? It was Wall Street that caused the last crash by creating these toxic derivatives, by gambling on this housing market. They crashed, but then they got a bailout, and guess what happened? And guess what happened according to this article, which I'll put a link in the description. Then in 2011 and 2012, they got incentives from the government to go up and buy all these homes in the thousands. Everyone, this is why I'm spreading this message, to show how unfair, how unjust, how unequal this financial system is and how unsustainable it is. And guess what they could also do? What you got to remember with these big institutions and these Wall Street funds that are investing in this real estate market, they're getting in now because profits are great. But if all of a sudden there's a housing correction next year with rising interest rates and mortgage holidays coming to an end, with forbearance coming to an end, and intervention by the government, while these institutions have investors that hold them accountable and they don't want any losses. So what could happen is we could see these institutions sell off massively and cause another housing market crash, sell off everything, flood the market with listings, let it crash, and of course the retail investors that are getting in now are the ones that are going to get destroyed. And again, they'll wait a couple of years and it's just a rinse and repeat cycle, what they've been doing again and again. Boom, bust, and every boom bust cycle, the rich are getting richer and the hedge funds are getting more returns for investors. And what I think is they could make the next housing market crash even worse by loading all these hundreds and thousands of properties. So everyone, I urge you, even though the housing market is booming right now, there are risks building up in the housing market. We are getting to the end of the road of this boom. I think the peak is very close. Interest rates are going up and even the IMF is admitting the interest rates are going up and it's a risk for the economy. Inflation's becoming a risk and it's going to put the central banks under pressure to lift interest rates much sooner. And like I said, these big institutional hedge funds could engineer the next housing market crash so they can come in again and buy up everything for cents on the dollar. For all my loyal viewers and subscribers still watching, you're awesome. If you haven't already, please tap that like and subscribe button. I'll keep you all updated in the latest housing market and economic news. If you're bored, I'll put up some other videos here. I'll see you there.